Welcome back to Market Day Report. I'm Scott Schulte, otherwise known as the Cow Guy. Coming into the close here, this is the important part of the day. Let's take a look at this corn table to see just how we're coming into that important part of the day. We've got that September contract down 1 1/4 cents at 5.49 last. New crop Dees, lo and behold, got a 5.50 number in front of it. We're down a half cent at 5.53 1/4, which is bumping up against the day's highs, but we're still off on the day. How about soybeans? What do we have happening over in that soybean complex? How about September's up 7 3/4 cents at 13.49 1/4. That's about 5 cents off the highs. November new crop's up 7.5 cents at 13.37, and about 6 cents, 5-6 cents off the highs there as well. How about wheat? Chicago wheat. Let's take a look there. We've got September up 11 cents at 7.22 1/4, and December is up 9 1/4 cents at 7.34 1/2. Following right behind, Kansas City hard red wheat up 7 3/4 cents in September at 7.09 1/4. December up 7 3/4 cents as well at 7.21 1/4. Moving right along, the Minneapolis spring wheat up 6.5 cents in that September contract at 9.15 1/4, and up 6.5 cents in December at 9.02. Okay, well, we're lucky enough to have Ted Seifried join us today from Zaner Ag Hedge. Ted is a markets guru. He's all things ag, right? So, Ted, now that I've just gone through a litany of those prices, anything there that interests you more than the others?
Well, we're trying, Scott. Corn wanted to be under pressure because of the improving conditions that we saw yesterday afternoon after the close. Most people were looking for those conditions to decline, but they actually improved. So, okay. But we did see some sales this morning, and that's kind of helping things out. That's really giving some strength to the soybeans.
Mm-hmm.
But as you and I have been talking about for weeks now, actually almost feels like months. Wow, we need to see the demand, right? And it's nice to see some of these sales trickling in, 130,000 at a time. Actually, we had 130,000 to unknown and 136,000 explicitly to China this morning. So if we want to say that's all China, I don't know if I believe that. But anyways, 236,000. Okay, it's a decent number. But remember this time of year last year, we were making million metric ton sales on a regular basis to China. Now, nobody believed that at the time, but it ended up being legit. So those are the types of numbers that we're going to need to see again, because we're looking for an export sales numbers that's an overall export number that's not terribly far off of what we saw last year. So to get there, we're going to need to see some bigger sales. And as I've been talking about, there's two ways to make that happen. One is fear. China had to be afraid by the forecast that, oh boy, prices are going much higher, stocks are going to be so much tighter, and that just really hasn't happened. At some point, I feel like if we don't get a really bullish USDA report here on Thursday, China's going to wait, and they're going to want to buy at lower prices, and we'll go down and make those harvest lows. And then we'll find the demand, and when we do that, that'll give us reason to go higher longer term. But in the short run, we're going to need something that's going to be really bullish to shock the market, and if we don't get it, I feel like we're going to drift lower and make those harvest lows.
Well, maybe that report is something that shocks us in the demand sector. We'll see. All right, Ted, stay right there. We got to go away and pay some bills. We'll be right back with Ted Seifried to talk about the livestock after these messages. Welcome back to Market Day Report. I'm Scott Schulte, otherwise known as the Cow Guy. And again, that's my last chance today to really say it's a cheap segue into talking about live cattle. Why don't we do that? Let's bring up that live cattle table as we go into the last 20 minutes of trade today. We've got October up 77 cents at 128.25, and we've got December up 65 cents at 133.55. But we can tell a rather muted session. Moving right along over to the feeders, and that is the same there as well. September up 7 cents at 163.27. We've got October up 35 cents at 166.05. Now, finally, we had a little bit of fireworks yesterday in the lean hog market. It seems to have settled down just a tad here today, but we are easy. We're leaking a little bit here. 57 cents lower in October at 84.02, and December's off $1.17 at 77.60. We're lucky to have Ted still with us. Ted Seifried from Zaner Ag Hedge. Ted, what do you make from these prices going into Thursday morning?
Yeah, as far as cattle are concerned, I mean, we're up near the highs and we are not really backing off of it. So that's good to see. But, we're going to kind of wait to see what cash develops like here later this week. I have justification, I think, for it to go higher. I think domestic demand is strong, but again, if cash doesn't go higher, we're going to have a really hard time getting the futures to follow. So looking at hogs, we had the big down day yesterday. We're worried about increasing production into the end of the summer into fall. We're worried about sort of waning demand, both from a domestic and an export standpoint. But, we had the limit down yesterday. We're not really able to follow through in a big way here today. And the October contract has been really hugging that 84 mark all day. So maybe this is a near-term bottom.
Right.
I've got a target down at 81, but bull markets don't always go and do that. And fundamentally speaking, I think domestic demand is going to stay strong. I'd like to see a bounce back up to the 86 to 88 range. So maybe we have found that near-term bottom here.
Perfect stuff. Great content. We'll leave on that note. That's a positive note. That's Ted Seifried from Zaner Ag Hedge. I'm Scott Schroeder, the Cow Guy. I'm going to hand it back over to Tammy.